What's going on, everyone? We got to get ready for DraftKings earnings. DraftKings coming off a nice 2-day run up here, followed by some consolidation. So we're getting that run up into earnings happening and taking place. One thing that I do want to point out here, we've still got to get over $17.11, but here's what I want you guys to get a little bit excited for, right? I know that DraftKings, for quite some time now, we haven't been able to get too excited about the price action and what it's been doing. It's up a little bit one day, down a little bit the next day. One thing that I do like is we finally have broken this consolidation period. We've been in for quite some time, right? If we just kind of go back just for the last 2 months, we can see down to the bottom of the range, up, down, up, down, up, down. But you can see here, this is a clear breakout, right? So this is a clear breakout, and you can obviously tell here we've coming into a level of resistance over 1710. This is going to start an exponential leg here. So what I would like to see happen here is any break over 1711 and any back test that successfully holds maybe 1 or 2 days worth of sideways consolidation. I would like to see that push. You can take an entry here off the push, or you can take the first entry here. Just understand that if you're a longer term trader, you can definitely take the first entry, and obviously if we stay above the 5-day moving average, you hold your trade. If you're a shorter term trader or a swing trader, what I would wait for is a break and then a retest, right? When we get that retest, if we do get that successful bounce, this is going to be your entry here, right? On that break and retest. I hope that kind of makes sense. Our next price target that we will be shooting for, let's assume and hope that we get a good market reaction off of earnings, is going to be $22.14. I know that will excite a lot of you guys out there because, people who've been holding DraftKings, I feel for you. It's been not the best, kind of last year to year and a half on the stock ever since, the fall from grace, when everything else pretty much started to decline going into 2021. It's been really bad. A lot of the bigger names like, your Apples and Microsofts and Metas of the world, yeah, they've had a bad 7 or 8 months, but a lot of these small caps have had a bad year to year and a half, right? I mean, give me a thumbs up on this video if you agree with that. If you guys are interested in kind of learning how to pick stocks, because right now is definitely a stock picker's market. Some stocks are up, some stocks are resting, some stocks still have not had their breakout. If you're looking to be interested in catching some of these breakouts, definitely join the Discord. That link is down in the description box below. I'm a no BS type of trader, right? If you get into a trade and it makes absolutely no sense, I will be the first to tell you that the trade makes absolutely no sense. If you get into a trade and you make some money and we're coming into a level of resistance and you want to hold because you want to be a hero, I'm going to tell you not to be a hero. I'm going to tell you to take those profits off the table, and I'm going to tell you to cut a loser when the loser needs to be cut. That's a lot of a lot, especially in the financial FinTwit and financial stock trading YouTubers, they don't really tell you. They don't really harp on. They don't stress. A lot of people will tell you to buy, and then when the stock has broken down every single piece of information that is shown to us on a level of supply and demand, they don't tell you really to sell. It's kind of like, well, let's wait for the next catalyst. Let's wait for this. Let's wait for that. How about we don't wait for that, and how about we jump into something else that's going to make us money, right? Especially a lot of the AMC and GameStop traders. If you guys would just cut that play after it lost a 50-day moving average on a daily time frame long time ago, right? You could have essentially just played the ups and played the downs anytime it showed some potential. But for some of these stocks, where they've been held, there was no reason to hold these stocks once they broke down. Like, let me just paint a very basic picture for you. If you guys were following me and you guys asked me a question like, hey, you know what, let's go all the way back here, right? Hey, you know what, I'm in DraftKings, right? I'm in DraftKings. I got to go to a weekly time frame. Let's just go back. What month is this going to take me back to? This is going to take us back about a year here, so to August, September of last year. Let's just say, for example, for the sake of this video, you were in DraftKings at $50, right? You had a nice little run up to 64. Let's say you sold 25% of your position. You took some profits, right? On this decline, as we started to decline here, you're looking at 1 day, 2 days, 3 days, 4 days, multiple days of downward pressure here, and then we kind of crack below this 50-day moving average here at around $52, and you said, hey, you know what, I don't know what to do in the position. I'm going to tell you one of two things. I'm going to say, hey, you can do this. If we get any sort of confirmation below this 50-day moving average and we start to build below this last bit of daily support here, which at the time was the 100-day simple moving average, you've got to get out of the trade. If not, hold this trade here into this level of demand. See if we bounce. If we do get a nice bounce and we can't get back over this level of supply, you either got to cut your profits or you got to reevaluate your situation. You know, the next area that you could potentially average down at would be around $47. But as soon as this was to lose this $47, which it did here on November the 5th, this is when I would be screaming at people saying, if you had no intentions on holding this or averaging down, and this was a short-term play, you have to be out of this play. You have to be out here now. If all you would have done was just sell below the 50-day moving average and the confirmation of that, you would have saved yourself a lot of money. You would have been out of this trade somewhere around $45. Yeah, maybe you would have taken a $6 hit, but you definitely would not be sitting in the stock when it was at $9, and you definitely would not be praying that it's going back over 17 today. I hope that makes sense. That's what I mean by being a realistic trader, having a realistic expectations, because realistically, ever since this lost a 50-day moving average, it's never really reclaimed it at all. One day here, lost it on the following day. Reclaimed it here, lost it on the following day. One thing that I do like about the price action now is that we've reclaimed it 1, 2, 3, 4, 5, 6 going on 7 days ago. So that's bullish, right? That's bullish for all of you guys who are in the stock now. But I mean, if your average is $30, $40, it really doesn't do you any help. Yes, you're going to recuperate a little bit of money. Maybe you can kind of, you know, wiggle your way out of this, but you know, that's a lot of pain. That's one thing that I don't want to see people go through this next go around, is a lot of pain. If you're making money in the stock market, we have to remember that it's not just about holding everything to the moon, but it's about actually cashing out. It's about actually taking profits off the table. If you don't know how to take profits off the table, you're never going to be successful, and you're never going to grow a real account. You know, now if you have a 10-year horizon and you want to hold stocks for 10 years, that's a different story. I'm not the guy for that. I'm not a long-term investor. I'm a short-term trader, day trader, and a swing trader. I'm not a long-term investor, so that's a completely different alley and avenue that I just don't really go down, because you know, I believe at that point you're better off probably, you know, picking a handful of, you know, good companies that have been around for a while, got good balance sheets, and picking a handful of ETFs and kind of just parking your money there and letting it sit for 5 to 10 years, you know, kind of dollar cost averaging in on the way down, dollar cost averaging in on the way up, and then just growing it slow. I don't really have the patience for that. I just don't have the patience to do that. I'd rather, you know, get in and out and make my money as best as I can, because I know if I'm losing money, it's on me. It's not on the stock market. This is one thing that I hate when I hear investors say. Day trading is like gambling. Day traders don't make any money. Day traders, you know, can't be profitable. If you can't be profitable, it's because of you, right? It has nothing to do with the market. It has nothing to do with the inflation. It has nothing to do with the news headlines. It has nothing to do with any of that. Now, when I lose money, it's completely on me, because 1, I didn't exit when I should have. 2, I held a position way too long and didn't take profits. 3, I was just taking FOMO trades just to take FOMO trades because everyone else is taking FOMO trades. You know, there's a reason why you're not making money. It's not that you have a good setup and then decide, you know, you have a good entry and you get into a good setup and then your money disappears. It doesn't work that way. If the setup is good and the technicals behind it are strong, you should be able to get in and make money. But the reason why a lot of day traders fail, and a lot of day traders gamble, and a lot of day traders blow themselves up, and a lot of day traders lose money, or swing traders lose a ton of money, is because they don't understand when to get out. They don't understand when to take profits. They don't understand, you know, that, hey, the good times don't last forever. I hope that makes sense. If you guys are interested in learning more about me or trading with me, definitely join my Discord. That link is down in the description box below, and I'll catch you guys all in the next one.